So Eunice has got a question here. Do you only buy houses for your clients? I see many townhouses in Ipswich, Queensland, brought in the high 200s in 2023, selling for low 500s now. Massive increase, isn't it? Also, way better yield than the houses. Can you elaborate? That one's from Eunice. So just a few things on that one, Eunice. So I'm happy for anybody making money through property, whether they're buying an apartment, unit, townhouse, share house, whatever it is. If somebody's improving their financial position through property, good luck to them. There's more than one way to skin a cat when it comes to making money through property in particular. And it's not to say that established properties are the only way you can do it. I just think when I've done my own research and if I talk into a general consensus, because we are talking very pinpointed townhouses here, right? We're talking about Ipswich, which Ipswich as a whole has performed fantastic over the last few years. We actually started buying in Ipswich in 2019 for around that $300,000 or mid $300,000 price points in some properties that were only 2010, 2015 build homes. And now those properties are in the $700,000, $800,000 territory, right? So there's some things there. I guess some of the discrepancies that we get into in that market though. So the unit and townhouse versus the established home. So firstly, you're buying a property that's on a smaller land component. So yes, we've got our win, that short win there at the beginning, but the land is what is going to appreciate as time goes on. I would think that as time plays out and the data on units versus houses, you're normally getting about 5% or less on a unit. You're normally getting about 7 to 7.3% on a house. That in itself tells you that over the long term, you're going to get that there. Some of the yield gaps. So some things to consider on the yield gap. Absolutely, you're more than likely going to get a higher yield on the townhouse because you're getting fairly similar rent. So let's just say you got a 3 and 2, one's a townhouse, one's a house. The house might be $500 a week. The townhouse might be $450 a week, but the difference in pricing could be 100, 200 grand difference. So as a yield, you get the higher yield on the townhouse. Some things to keep in mind though, some of the running costs on that cheaper property might be higher as a percentage, right? So let's just say council rates, water rates, insurance, they're going to typically be a higher percentage versus the value of the home than the standalone house. And then particularly repair bills, because if you need to fix the hot water, if you need to fix the dishwasher, aircon, whatever repairs you're going to do, as a percentage on the least expensive property, it's going to be a higher percentage. So it's going to close that yield gap. Also, do you have body corporate, strata fees, etc.? The other thing, I guess, to keep in mind as well is for future value add. That townhouse is going to stay a townhouse. You're not going to be able to subdivide it. You're not going to add any structures. You're not going to add any extensions to it. The only way you're going to add value through that property is through an internal or potentially slight external cosmetic renovation. So if we talk about longer term, and again, we go back to that land component, we have multitudes of ways to add value to that property in the future. So that's the other benefit that you get. We're not just trying to focus on this little quick win we've got. And that replacement cost, which I talked about, new home build, is what's bridged that gap, particularly in that unit townhouse space at the moment. So construction costs have gone up 50% plus since COVID. So this is a thing to keep in mind. Like if we go build the townhouse, and let's just say it's spec'd out 3 and 2 versus the home that's a 3 and 2, the build costs aren't going to be too dissimilar. They basically will be the same if they're the same size home, right? So where that lag has caught up is because some of these townhouses were $350,000. If they got set on fire tomorrow and to rebuild it, it's going to cost $500,000 just to rebuild that thing. So they've got that uplift. It's the same premise as why some of these house and land package areas have got some quick wins over time, over the last kind of couple of years, because that build cost has gone up. But if you went back historically and you compared complete greenfield sites that went through stages 1, 2, 3, 4, 5, they basically have performed at the rate of inflation, because typically speaking, building costs longer term had gone up at 2 or 3%. So your house price movement went up at that, because why would I come and buy your house when I can go to the developer down the road, get all the bells and whistles on it, get all whatever grants or whatever it is they're offering. Yeah, I might be 5 minutes down the road, but I can build it out to how I want. And it's until that new supply or that infrastructure comes through, do you really start to see that growth. We've actually done a long video on the YouTube channel somewhere. It goes for about 45 minutes, where we compared the house land package areas in Brisbane. There's about 9,000 odd properties or whatever. But so you've had you basically had a pandemic to make that happen on that replacement cost. And that gap will just widen over time. So as that land gets more and more, I guess, more and more invaluable, we've got more of it. So that gap will just get bigger and bigger as time goes on. So I guess not to say that you can't make money, Eunice, but if we're talking about longer term, we're not just focused on sniping a little bit of money here or there, because that's the other thing with property in Australia. Costs a lot to buy a property, about 5% in terms of buying costs. Costs a lot to sell a property. You've got your selling fees. That's normally going to be somewhere around about 3 to 4% mark once everybody's taken their clip. Then you've got to pay capital gains tax. We're not like places like America where we can roll that capital gains into another purchase. So yeah, it's just something to keep in mind as well in terms of if you're using it as a way to quickly extract equity and then head on to the next purchase, then that's okay. But again, you might run into that stall where you've got less land value, so you might go through a bit more of a stagnation than the 3 or 4 bedroom freestanding home in the same area as well. But thanks for flicking that question through, Eunice.